Session starts now. Right. As we all know, the forex trading market, it doesn't move in one direction, right? So what I mean when I say it doesn't move in one direction is it doesn't go up forever, neither does it go down forever, neither does it go sideways forever. Actually, for many of us who don't know, the forex market moves in what we call an uptrend, right? This is when price is buying, and it moves in what we call a downtrend, and this is when it's selling. But then at some point we will see that we can have both an uptrend and a downtrend, and then at some point price would seem to do what we call ranging. By ranging, what I mean to say is price won't be going anywhere. So when our market is going up, we buy. When our market is going down, we sell. A lot of newbies, what they have in their head is, what if I buy in another account and what if I sell in another account? Well, it doesn't work that way. As always, we have to know what we call market direction. Right. We have to know what we call market direction. Market direction is where most of our profitability is going to come from. And the whole purpose of this course is for us to be able to master market direction and to know when to enter in a certain type of market. What I mean by that is, when we are buying or when we are in a buy market, we just don't come and buy anywhere, right? Or when we are in a sell market, we just don't come and sell anywhere, right? So we have what you call points of interest, right? Points of interest. Sorry, points of interest. And we can term this POI, right? So what a point of interest basically is a point where we are looking either to buy a trade and either to sell a trade. I'll repeat that again. Point of interest is a place whereby you're either looking forward to buy a trade or to sell it, right? And these are areas where we can be satisfied that after all the analysis that we would have done, we will be certain that this is where the market is most likely to react. So we can also term it as points where we expect our market to react, right? Now, before we go any further, we have to know of these two things. We have what you call a take profit, and we have what you call a stop loss, right? So, when I was just starting to learn forex, I used to ask myself a lot of questions, and those questions would affect me. So it's actually a good thing that I'm getting to answer those questions for you without you even asking them, because I know some of you already have those questions in your head. What is a take profit? A take profit is a point where we say we've bought our trade or we've sold it, and say we've gotten a certain type of profit. Let's say we entered the market with $100 and then we get $80 as our profit. This means our whole account balance is now on 180, right? And we would want to say, okay, I've reached $80, so it should trade. So what we do is we set what we call a take profit. And the stop loss is basically a position we are setting to say, let's say I have $100 and I've encountered a loss of $10 and I don't want to encounter more than $10. what I'd basically do is I would set that as a stop loss, a point whereby I'm saying I've had enough losses. If I reach a loss of $12, I want my trade to close. If I reach a point, a maximum loss of $15, I want my trade to close. But often many people, or I've seen that many teachers, they don't answer this question. What should my stop loss be, or what should my take profit be? I understand most of us, we already know what a take profit or a stop loss is, but we don't know how to use them correctly, right? So when we are getting trades, we should get trades whereby we're saying that we have what we call a 1S2. In this course, what I'll teach you is I'll teach you trades that have at least 1S to 8 reward ratio going up. So it's 1:8 reward ratio going up. What this basically means is, let's say I have $100 in my account, right? I would want to risk at least $10 in that account. And if I risk $10, I'm risking $10 to get $80, right? Meaning that if my stop loss is $10, my take profit is going to be $80. It doesn't make sense for us to say we are risking, let's say we have $100 account and we say that we're going to risk $50 to make $10 or $20. Or $20. At the end of the day, what we see is all the stress that we go through to bear a maximum loss of $50 so that we can only make a profit of $10 to $20. It's not worth it, right? It's not worth it. Why am I saying all this? I'm saying all this because at the end of the day, the entry points that I'm going to teach you, remember I said we just don't buy anywhere, right? We just don't sell anywhere. And now this is the right time for me to transition you to this, right? Like I said, the market is what we call an uptrend. It also has what we call a downtrend, right? But in an uptrend, what we have is we have what we call highs and lows. We have what we call highs and lows. Highs and lows. Before I explain what these are, at the end of the day, we would want to come and, let's say we're in a buy market. We don't want to come and buy here, right? Why? Because our trade will carry us all the way through up to around these areas, and then it will start buying. What we want to do is we want to buy, or we want to target areas where we can say these are the exact points where the market reverses. Now, this is how the market moves. The market moves in what we call impulses and corrections. So if we are in an uptrend, right, we expect to see what we call an impulse, right? This is the bigger move that favors the side of our trend. And then we have what we call a correction. This is the smaller move whereby the market breathes so that it gives us another impulse to continue, and then a correction. An impulse to continue, and then a correction. At the end of the day, what we are going to have is this whole uptrend, right? Now, I'll come back to that again and explain it in a different way. When we have an impulse, what it basically means is we are having what we call a buyer's force, right? It means there is more buyers that are overpowering sellers within the market. And then when we have what you call a correction, it means sellers have stepped in, but then at the end of the day, buyers, since they are strong, are going to give us another impulse. So the market does not move in a straight line forever. Neither does it just move in a straight line. It has to give us these impulses and corrections. This means that when we get an impulse, the market moves. When we get a correction, the market breathes. When you get an impulse, the market moves. When you get a correction, the market breathes. When you get an impulse, the market moves. When you get a correction, the market breathes. Right. Since this is our lesson 2, I would want us to know this so that we don't catch up with it in the future. It's better that we know this today, right now. So, what we would see again is the impulse move. It happens so quick. An impulse can take us, for example, this is just an example. An impulse, since it's the larger move, it can take us 30 minutes to complete, right? But the correction, since it's a breathing move, what you can see is it can even take us like 1 hour or 2 hours, right? And then followed by an impulse, which can take us around 30 minutes again. So what I mean to say here is impulses, they take less time, but corrections, they take a longer time. Why do they take a longer time? Because these are building what we call momentum, or they are building force. They are gathering more buys so that it slings going up, right? So the same concept applies when we are in what we call a sell market. We have an impulse, a correction, an impulse, a correction, an impulse, a correction, an impulse, and correction. But by so doing, at the end of the day, the end result is we will see a stronger downtrend. Even if we're buying, we will see a bigger uptrend. Now, there's no formula to learning some of these things, and I feel like this is also the right time that I introduce you to this. When we get an impulse, we leave what we call a high. When we get a correction, we leave what we call a low. When you get another impulse, we leave what you call a high. When you get a correction, we leave what you call a low. When you get an impulse, we leave what you call a high. When you get a correction, we leave what you call a low. I hope we're understanding what I'm saying. What I'm saying, sorry. I'm not sure if there's anyone with a question like now before I continue. But well, like I said, I think it's best that we ask these questions when we're done with the session. Now, when we're in a downtrend, we leave a low when we get an impulse. Then when we get a correction, we leave a high. Impulse again, we leave a low. Impulse, we leave a high. And going on. But now I want us to go to this next stage, whereby we are going to add a little bit of salt. Although some of these terms, they don't really matter, I figured out that some people are a bit more technical in the way that they explain or understand things. So now, let's say we're in an uptrend and this is a downtrend, right? If we have an impulse, this is a higher high, right? And then if we have correction, this becomes our lower low. Again, this becomes our higher high, and this becomes our lower low. But if we're in a downtrend, we name it different. This becomes our lower high, and this becomes our lower low. This becomes our lower high, and this becomes our lower low. This becomes our lower high, and this becomes our lower low. Right. So this is the difference of how we name our highs and lows, depending on the scenario that we're either in an uptrend or we are either in a downtrend. Right. So at some point, remember we said when you're in a buy market, what we are looking forward is to buy from these lower lows. And when you're in a sell market, what you're looking forward to do is sell from these lower highs. We do not oppose the trend. I'll teach you on how to confirm. I was supposed to teach you about market structure, but it's useless for us to learn about market structure if we don't understand the core foundation of it. And just for the sake of it, guys, since we are just beginners, please don't feel the zeal, or don't try to rush to deposit money in your real accounts like no, I should. Let's first know these basic core concepts, and then I'll tell you when we're ready to do that, and then we'll move together as a team. Is it right? So since we now know that we buy and we sell, I want you to understand that there's a point in time where we are going to have a ranging market, and the ranging market is basically where price is not going anywhere. It's just playing around one area. And when price is not going anywhere, what do? We do not sell it, neither do we buy it. We just leave it like that. Right. So I'll go on my actual chart, and we'll look over a few pairs so that I show you exactly what I was talking about, and we all get to understand. Right. So let me share my MT5. This is my MT5 over here. I'm hoping we can all see it. Right. Now I want you to look at something, and I want us to all agree on something. Right. We, at this point, what we see is our market was in a buy market, right? Let me take my writing too. Our market was in a buy market, meaning that we were buying. Just a second. Let me increase my visibility over here for my pen. Right. What you can see is, like I said, with what we call a high, with a low, with 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 a high. Meaning that our market in this scenario is buying, right? But then I would also want you to look at this. At this point over here, I think this is the only point that I can actually show us that the market was not really going anywhere, right? What you can see here is the market was not really going anywhere. It was just playing around. It was just going sideways. So if we had bought it, we would have lost. If we had sold it, maybe at some point we would have lost. If we had bought it again, we would have lost, right? So when this is what we call our sideways moving market, right? It's not really going anywhere. But then after that, I want you to look at this. We have a low, we have a high, we have a low, we have a high, we have a low, we have a high, and so on going. This means that we are in a downtrend, right? So now I think that we are all able to see when we say that we are buying, and we are all able to see when we say that we are selling. And we are all able to see when we say that we are in a sideways market. Right. Is there anyone with a question right now? You can simply raise your hand, and then I'll I'll answer whatever that you need to ask. Is there anyone with a question right now? Anyone with a question as of current? Anyone with a question? I usually like those questions because they will show us that we are going somewhere, is it? All right. Now let's go to candles. Let's go to candles. So let me share my whiteboard and let's go to candlesticks. I think we did this in the first lesson, but for the sake of others who didn't understand, it's necessary for us to repeat this in a way that we can all understand, right? So when we are in an uptrend and when we are moving in that uptrend, I need you to know something. Okay, I think this is the perfect time that I need to do this. Just a second. Just a second. Let's not close our chats. All right, let me share this screen. Right, remember what we said in the last session. I feel it's necessary for us to repeat it. When we are buying or when we are going up, what we expect to see are green candles. Let me put green. Okay. Okay, just a second. I want to. Okay, what's happening here? Right. So when we are in a buy market, we expect to see green candles, right? And when we are in a sell market, we expect to see red candles, right? So sometimes what you see is people do what you call chart customization, whereby sometimes someone can just choose to make their green candle blue and then their red candle gray, or sometimes they can just choose their colors. So let that not affect the way that you see things. When you see a chart with different colors, at the end of the day, it's not that that chart is different from yours. It's just that maybe someone would have chosen to put a different color than yours. Some people like to see their charts different, is it? So by saying that, remember I said when a green candle opens, it opens from the bottom and then it goes up and then it closes up. When a red candle opens, it opens from the top and then the way that it closes is it closes down, right? But then there's some scenarios whereby you're going to see that you have what we call wicks, right? And in this example, let's say this is the wick that I'm talking about. Okay, let me put a green color actually so that it won't overshadow that, right? So that it won't overshadow that. So let's say at some point, what you can see is your candle when it opens, right? It can be red. It can start as a red candle. A red candle sells, right? But before it closes, it can give us what you call a rejection, right? And then from that red color, as it moves, it ends up turning to a green color, right? Meaning that starts by selling, and then at the end of the day, the end result is it closes as a buy candle. So when it sells, it leaves this, we call this a rejection, whereby there were sellers in the market, but they were overpowered by buyers. So this tail is just evidence that price once pushed to this area, but then it failed and it was overpowered. Just as much as when we are, just as much as on a red candle or a candle that sells, sometimes what you might see is, you might see that it starts as a buy, meaning that it starts as a green candle, right? But then at the end of the day, when it gives that rejection, we have now more sellers in the market than buyers. It gives us a wick, and then it ends up closing as a red candle. What this basically means is, this is evidence that at some point we had buyers in the market, but they were overpowered by sellers, and they left that week. In this week, we often call it a rejection. Now, it's not always when you call it a rejection, but most of the times when you call it a rejection is when it now has a very bigger tail, sometimes a bigger tail than the body. So you can actually see that at the end of the day, your tail is going to look like this, or your rejection is going to look like this. You're going to have a short candle and then a very longer tail, meaning that this is a justification of a rejection. Right. So let's come on the actual chart and let's see about the areas and the candles that I'm talking about. This is very essential for us to know when we're just starting out like this. Why? Because we're going to be using this in the future to trade and to open our entries. Right. So what you can see here is, let's start by obvious points. Um, we have this uptrend over here, right? But as we have this uptrend over here, I want you to see something. Yes, these candles have their own tails, their own tails, their own small rejections, but these were not area based, meaning that if we come here, we can actually see that this whole area, there's many rejections. But if we just mark this area here, we can't say there's many rejections. It's only one or two, is it? Or even if you come here, it's only one or two, is it? But here, what you can actually now start seeing is, we have a lot of candlesticks that have these rejections. And when a rejection happens, price usually goes the opposite direction. I want you to look here as well. We're buying, but then there's this area with many rejections. And what does price often do? It goes the opposite direction, just as much as here, just as much as here, just as much as here. Or again, if we want to support that fact, we can see that we were in a buy area here, but then we didn't have as many rejections on here and here as we had on here. But these rejections, we sort of like had a small sell and then rejections and a continuation. So let's look for more of those areas. Since I spoke to you about the different types of volatilities or pairs that we have, let me choose to use another type of volatility that's different from the one that we were looking at, and see what happens. Because at the end of the day, what we want to do is to be able to support these and to be able to work with them, right? So I think let me go to my 2 hour, and what you can see is, with these rejections, we were selling here, selling here, selling here. What do you see? Rejections. We bought, what do you see? And rejections. We sold, what do you see? Rejections. Right. Again, let's come here. We had this sell-off. With this sell-off, what do you see? Rejections. This buy-off, what do you see? Rejections. Sell-off, what do we see? Rejections. Buy-off, what do we see? Rejections. Right. So these rejections that we see on candlesticks, at the end of the day, what they can say is, all right, we're in a buy trend, but then we now have rejections. What you can actually see is you can see your trend reversing. This is just the basic core concept of what we need to be knowing. But at the end of the day, it's important that we train our eyes to know these things, right? And likewise, you can have areas that can actually support. Remember, if we have a tail that's bigger than the body, that justifies enough that we are going to have a stronger rejection, or it's an area where we're witnessing stronger rejections. I think we can all see even on this candle over here. Sorry, I need to mark this over here, just as much as here and as here. I think you can see when we're having this rejection, what's now happening in this area? Price is pausing, most probably for it to give us a sell off. Is there anyone with a question at this point in time? All right. So since we don't have anyone with a question at this point in time, what we can do is I'll give you a small assignment in the group that we can do, and we can go train our eyes to see areas where we can generally spot an uptrend, a downtrend, a ranging market, areas where we can say price was reacting to rejections. I'll also send you some small PDFs so that we can go read on them and be able to say we are done with this second phase. So let's meet again tomorrow, guys. And tomorrow I'll be giving you an introduction to market structure. Remember, the goal is to learn forex trading the proper way. We don't want to rush this course. At the end of the day, we don't want to trade it right. So thank you for joining this session. Let's have a great evening and good night.